Hello guys, welcome back to another video. Today I'm going to be speaking about breaker blocks and mitigation blocks, okay? I'm going to be speaking about the differences, what they look like, and I'll be showing you examples in the charts on what they look like, okay? So starting with a breaker block, okay? Essentially it's just a pattern, right? It's just a pattern, but you need to have context on when to use it. Today I'm just going to be showing you what they look like and how to find them, okay? So a breaker block in a bearish scenario, so a bearish breaker block is you'll have something like this, okay? You'll have a high, a swing low, and then a new high created, right? So you'll have a higher low and then a higher high, okay? Now, a breaker block will be formed once this higher low gets taken, okay? So essentially, what you'll get is a market structure shift. So I just like looking at it like this. You'll get a market structure shift, okay? And then, what the breaker block would be is the last down close candle, right? So the last down close candle here before this push up, that's the breaker block. What can you then expect? Well, you can then expect for price to return back into there, so the last down close candle, and then to actually sell off, okay? So what we have here is that we were previously in a uptrend, you can say. We were bullish in price, and then price breaks below the most previous swing low, so the higher low gets taken. This now becomes a breaker block, the last down close candle before the push up, and then we expect that to get returned to and then trade down, okay? Simple as that. Now, mitigation block is essentially a failed breaker block, and what I mean by that is, of course, a bearish scenario again, is that we may previously be in an uptrend, okay? So prior to this, and then what the mitigation block would actually look like is that price won't trade above, okay? Like here we had price trade above and create a high. Here price won't trade above and then we drop down, okay? Now what this shows is that we had this low get taken, okay? Now this is our mitigation block. What's the mitigation block? Well, the mitigation block is also the last down close candle before this push up, okay? The last down close candle before the push up, right? That's our mitigation block. What can we expect? Well, we can expect it to get traded into and then drop down, okay? Now, I want to add on a point. Breaker blocks and mitigation blocks are good with a fair value gap, okay? They're good aligned with the fair value gap. So if there was a fair value gap here, fair value gap here, they are more likely to hold. It's high probability with a fair value gap, okay? And yeah, and also another point for mitigation blocks is that whenever we get push up and then drop down, this could be a new mitigation block. So the last down close candle here, okay? Last down close candle here. These are all PD arrays. These are all points where price can come back into and then continue with the trend, you can say, or with the bias, okay? Now I just want to go into detail on what the mitigation block actually is, alright? So the mitigation block is essentially that over here you've actually got buyers, okay? Let me just remove this. Over here you've actually got buyers, okay? And then when price comes down, there's still buyers over here, right? Now these buyers are still in the market. Why? Because they've probably not had any take profit levels hit, okay? So obviously this high or any external highs, so they're still holding on to their buys, okay? So maybe institutional traders, you know what I mean, right? So what price will do is actually mitigate them buys, okay? So in this period the trader is in drawdown, okay? When price comes back into this area, the traders who bought here are now out of the market. Why? They're closing their position at break even, and then that causes the market to continue coming down, okay? And yeah, let's get straight into the charts now. I'm going to be showing examples of breaker blocks and mitigation blocks, okay? Okay, so here I'm going to be showing you. So in here we've got a high, and then a high low, and then a high, okay? Now, essentially what we want to see if we look for breaker blocks, is that we want to see this low get taken, okay? So if we just put this forward, okay, we can see that this low gets taken. Now, how do we identify our breaker block? Okay, so this is the pattern. So remember earlier, let me just quickly draw it out. We had a high, a higher low, and then a higher high, okay, and then we had the higher low taken, so the most previous swing low, okay. So you can clearly see that we've got this pattern over here, right? Okay, we've got this pattern over here, right? And then we had the break here. So here we had the break here. Now, how do we identify our break block? Well, remember I said that last down close candle. Okay, the last down close candle. So this would be our last down close candle. Or really and truly, it could literally be this whole segment, because on the high time frame, it will just be like one candle. Okay, but sticking to the purpose, the last down close candle. Okay, and then what we expect is a return into here and then a sell off. Okay, a drop. So this is our break block. We've now identified our break block, and let's just see. Actually, just remove the trade. Okay, let's just see how it reacts to the break block. That's the whole purpose of this video. So we come into this breaker block, okay, and then we want to see a sell off, okay, and that's what we get. Okay, so high low, higher high, break below, come back into this last down close candle, and then we sell off. Okay, so essentially the most previous swing low that's created a swing high, so the most previous high low that gets taken, the most recent high low that gets taken, come back into that area, and then sell off. Okay, so another example of a breaker block, okay, is here. So essentially what we could see is that, or what we can see is that we've got this new high formed over here, we've got this low. Okay, so in this segment of price action, so remember, in this segment of price action, we've got this high, we've got this low, and then we've got this new high over here. Okay, now what would be our breaker block? Well, our breaker block will be here, okay, because this is the higher low. Okay, now this is only our breaker block if this gets traded below and a return back into it. Okay, so if we just put this forward, okay, we can see that we had this swing low get taken. Okay, so we've had this low to this high, high, the swing low get taken, this high low get taken. Now we expect a return into this breaker block, so the last down close candle before this push up. Okay, we expect a return into here and then push down. Okay, so let's just see. So of course we get this push into here, and then you can see that we do drop down. Okay, that we do drop down from there on. Okay, if you go down to the 15-minute time frame, also remember, if you just check the last example of the breaker block, you can see it was aligned with the fair value gap. I forgot to mention it, but you can also see here, right? Look, what can you see? It's aligned with a fair value gap. This fair value gap also gets respected. Why? Look at the bodies of the candles trading within the fair value gap. Okay, so the bottom of the first candle to the top of the third candle. Okay, this inefficiency over here. Okay, price respects it and it's aligned with this breaker block. Okay, and you can see that clearly here. Okay, now on to the next example of mitigation blocks. This example is the mitigation block. So essentially the mitigation block is a failed breaker block. So we get a failed swing high, right? So price fails to trade above this high, okay, and then we come down, taking out the low, so the low that actually created this move. Okay, now we wait for that to get taken, and then that becomes our mitigation block. Okay, so if we just put this forward, wait till that gets taken, and then we take that, okay, and we take that, wait, not just yet, and now we take that, right? So we take that over here, okay. So now what? This becomes our mitigation block. Why? Because failed swing high, okay, so we failed to make a new high, and then we get a push down, essentially creating a continuation in a new downtrend for it to return back into this segment and price. Okay, so essentially a failed breaker block, but it's a mitigation block. Why? There's buyers here, and they're most likely they've not got their take profit target yet. Institutional traders. Now, they've not really seen a take profit yet. So what happens is that these buyers are actually holding on. They're holding on until they come into about break even. So where's their buyers? So there's literally buyers in and around this segment. Okay, so as it's coming down, there's buyers, and then what they do is hold on until it comes back into here. When price comes back in to here, so this area, to this mitigation block, they've now mitigated the orders. Okay, they're now at break even, they're out, and then that's what causes the market to drop. Okay, so in this case, this is the last down close candle. However, you can clearly see that this down close candle is very miniature. Okay, so it's very miniature, it's very small. So you can literally just do it based on the last two down candles as well. Okay, or the one that's bigger. Okay, it's up to you. I'll do the last two just to be safe. And yeah, so we expect price to come back into here, into this area, and then drop down. Okay, so we actually come into here, so we weaken here, and then what do we get? We actually start dropping down heavily. Okay, and we can obviously see that. Okay, and now on to the next example. Okay, so here we can see that we've got this high, right? And obviously we can see we're just clearly in a bullish day, uptrend, whatever you want to call it, right? And what we want to see is, we want to see if this high actually gets taken. Okay, so what we expect is a fail swing high. So and then of course we get a failed swing high. Why is it already a failed swing high? Well, because we had this low. If price is not going to turn from here and take this high out, or not going to turn anywhere around about here, it's not going to go up. Okay, it's going to come and take out sell side liquidity and all these old lows. Okay, so now this low has actually been taken, right? Let's put it forward. This is actually our mitigation block. Okay, now this is quite small, yeah, so you can do the last two down close candles, but let's just keep it with this down close candle. Now this is now our mitigation block. Okay, so what we want to see price do is come back into here and then sell off. Okay, you can also see that we do have a fair value gap aligned with this mitigation block, so 2 PD arrays, which is very powerful. Okay, let me just extend this out, and let me extend this out too. We have 2 PD arrays, so we have the mitigation block and the fair value gap. So of course the low of the first candle to the high of the third candle, that inefficiency in between. Okay, now I want to see price do is actually come up into this area and then sell off. Okay, so let's just put this forward. Nice, we actually do come into this area, so the fair value gap and the mitigation block come into this area. Now we want to see a drop below, okay, to seek the next form of liquidity, sell side liquidity, and of course here as well. Okay, so we just expect to drop overall. Okay, we expect something to happen, we expect price to reject and move away from here. Okay, so remember, this is our mitigation block. The last down close candle before this push up failed to break above this high, failed swing high. Okay, and that's our mitigation block. The last down close candle, okay, we break below it, return back into it, and then we expect a move away, and then we start to move away, and then what happens, we consolidate a bit, and then we do actually drop down, okay, and you can see that there. Okay, now that's a mitigation block for you. Now remember, with the mitigation block and breaker block, you do need more context behind it. You can't just trade any mitigation block or breaker block you see. Okay, you have to have a narrative, you need to have a bias behind it too. Okay, this video is solely to show you guys what they look like and where to find them, how to draw them out, etc, etc, and what the differences are, if that makes sense. Okay, now I hope this video was helpful, I hope it was insightful. Make sure to join my public Telegram channel, which is linked below. Also, my Instagram will be linked below, give that a follow, and my private mentorship, which there's a few spaces left if you do want to join that. That's totally up to you. I teach a lot more in depth, and yeah, I really hope you learned something. Until next time, take it easy.